Okay, and go back to sharing the screen. Okay, I'm not sure why we can't stream into Facebook. I'm going to have a look at it this afternoon. I noticed Brian Knight managed to stream on his session last night, so he must have the answer. So Crossfire, it's all about the handover, the crossover from the London market to the New York market, and we try and take advantage of a certain amount of manipulation that goes on in that handover period. What I'll do is I'll just type on here the pairs that we look at in the afternoon session. So we look at EUR CAD, EUR USD, a couple of British pairs, GBP CAD and GBP USD. Need to move that down. And then there's a fifth pair that I look at. It wasn't part of the original problem, but I did a lot of testing, and I found that gold actually moves at the same time as those pairs. So USD. So there are actually 5 pairs for the afternoon session. If you're doing Crossfire in the morning, 6 till 8, it's 4 different pairs. And if you want to know more about that, you can go to I believe it's been archived in the Facebook group, but there are some sessions and there's a workbook as well as the videos you can have a look at. So these are the 4 pairs, sorry, 4 Forex pairs plus 1 metal that we're going to look at. And I'm just going to quickly go through those just to see if there's anything happening. This is the first pair. I like to think of these sessions as me thinking out loud rather than anything else. I'm not trying to give out trade signals. I'm just trying to let you know how I think when I see the chart. So what I do normally is I look at it with and without the actual candles. So I'm working on the 5-minute chart at the minute. What I can see here is that the wave is actually going in a downward direction. It paused at that point, it leveled out at that point, but it's now continuing its way down. If we put the actual candles on, you can see that that's the case. It paused around that point, it tried to get back up, and then it's now continued back on its journey downwards. We've got a down zone here. The candle before, we got a wave down. That's the color change from gray to purple. So this is all saying that price is heading down. We've got a bear candle there, and we've got the bearish indicator here. So everything is telling me, including the PSAR being on top of the current price and the current price being below the 55 moving average. So everything's telling me that price should go down. What I'm going to do, and I'm not suggesting that anybody takes this trade, but just for the process, just for purposes of outlining the process, what I would do is I would set my stop loss on that red line, which is at the top of the body of the bear candle. If you've got the trade manager, you'll have noticed that it's always best to put your stop loss in first. Well, actually, it's second. What you need to do, first of all, is set your risk percentage. So you set your risk percentage, you then set your stop loss, and then you enter the trade. The trade manager will automatically work out your lot size. So we'll put that in green and we'll mark it as our entry point. And as I say, I'm just doing this for demonstration purposes. I'm going to select short position. I'm going to put it on that green line there. And I'm going to drag this down to my red line. And now what I see is that we've got a stop loss of 7.3 pips. That could be a little bit too tight. You may wish to increase it if you want to, because spread might take you out a little bit earlier than you imagine. I'm going to leave it at that, and I'm going to change my take profit line, if I can get it to settle, I'll leave it at 1.05. I was trying to get it on 1%, on 1-to-1, but it won't settle on there. I'll go for no. I was going to try and go for 0.99. It's just not having it. I'll leave it at that. As I say, this is just for demonstration purposes. Obviously, as soon as I get into the trade, price decides to turn around and head in the wrong direction. I'm going to put a little line on there to mark my take profit, and I'll make that one blue. So we'll just leave that one. We'll go and look at some other pairs, and we'll come back to that. Euro US. I need to reset that chart. Still on the 5-minute chart. What am I seeing here? I'm seeing a down zone. I'm seeing a wave down, but price is actually going up. And this is saying bullish. The PSR is below the price. So we're getting conflicting messages on Euro US. So I'm going to leave that alone for now. Just flick back to Euro CAD, see what's happening there. That's not looking good. Okay, so we'll go to the British pairs. That's the wrong one. Pound, Canadian dollar. We were in an up zone. We got a down zone there. We got a wave down there. The candles changed from grey to purple, and price started to go down, but it's actually contradicting itself there. So again, we'll leave that for the time being. I'll look at the fourth Forex pair. Right, so the latest zone signal was an up zone, and that was almost an hour, well, just an hour ago. There was a wave up signal at the same time, and since that time, price has been steadily increasing. It got to a point there, which is a significant point. Let's just put that on there. Can you see that there was a similar reaction when price got to that point there? And that's almost level with that point where price turned around on this occasion. So we've got a bit of a pullback. It could be heading north. I would wait for a stronger wave candle there before I would get into that one. And then I'll have a look at gold. That's an interesting move. So it's been, although it has been heading up, it's been sort of consolidation in that period there. It was a wave up and then a wave down and then a wave up, and now we're in a wave down. So it's still messing us around a little bit. We're in a wave down and price is going up. The PSRs are below, and we're still bullish according to this. So because of this conflicting information, I'm going to leave that alone for now. It's not even 1/4 yet. Normally, if we get a move, it'll be nearer to 1:30. So I'm just going to take advantage of that time that we've got to look at another trade, which was not, this was also on Crossfire, but this was this morning's. It wasn't within the time span that we normally look at, but I was looking at the charts before I came on, and I noticed at 11:20 there was an opportunity to get in here, and I'm just going to talk you through my thoughts and reasons for getting in the trade. Okay, so I'll just look at a bigger time scale first of all. Look at the 1 hour time scale. I'd noticed that price was sort of moving up, moving down, moving up, moving down. But then at this point, we started to get a really strong move down. This was this was at 11 o'clock. It started to move down pretty strongly. So I took a look at it, and I looked at it on the 5-minute chart. And what I was seeing was we're in a down zone. This was from 20 past 10. We got a wave down signal at, well, half an hour later, 10:50. These candles were sort of flat. The wave candles were very flat at this point. So it was strongly pushing up at that point, then it leveled out, and then it began its move back down. What I can see when I look at that is that this is the 55 moving average, and I'm always wary of moving averages because price tends to either bounce or break once it reaches that moving average. Earlier today, I did a trade on this pair, and it did exactly that. It where was 6 round about here. Yeah, I think I was in a buy on this one, and it sort of, I put the candles back on, it reacted off that. You see there, it hit that 55 moving average, and then it sort of stuck to the moving average for a while. And I was conscious of that and thinking, do I really want to get into this trade? So I waited until we got some really strong candles. Not quite sure if that is my actual entry point or whether I waited till it got below the 55. I should, in theory, have waited till it got below the 55 moving average. So let's look at the actual candles. Yeah, yeah, I was waiting for the actual price to get below the 55. So I didn't get in on that candle because it was still straddling the moving average. I saw those two candles, and I saw a bit of an indecision candle on that candle. So I still stayed out. I was just watching it, see what was going to happen. And then this strong candle came down. So I got in just on a demo trade. And I saw price just making its way down. It's still going down. I'm just going to mark that. I'll drop that down to 8. So that's currently you're looking at an 8-to-1 risk to reward. So although this is a Crossfire pair, it's outside of the time span that we normally look at. But there's nothing wrong with taking these trades. So that's gone to 1, 2, 3, 4, 5, 6, 7, 8, 8. Risk to reward of 1 to 8, or yes, 1 to 8. But I would also wanted to point out what my thinking would have been if I'd been in a live trade when this price went back up. I would probably have got out of the trade. I would probably have moved my stop loss up to, well, initially, certainly to break even. And then I might have been tempted, when price got down to this second line, I might have been tempted to drag my stop loss down to that number 1 risk to reward, so that I couldn't lose. Something. I would not only would I not lose, but I would be guaranteed a risk to reward of 1%. That's the reality. I would have probably got out when price started to move back upwards. But what I wanted to show you was, if you look at if I took the trade on the 5-minute chart, if, as some people recommend, you get out of the trade on a higher time scale. So if you get in at the 5-minute chart and then you sit on the 15-minute chart to get out, you can see that this is being smoothed out. And therefore I may not have taken action and got out. I may have been tempted to stay in. If you look at the 1-hour chart, it's even more smoothed out. There's just no pullbacks on that chart. So what I'm trying to illustrate is, if you move up a time frame when you're in a trade, you might be tempted or might be more confident in staying in, because these purple candles are really quite strong, and they're actually getting stronger. So going up a time scale could actually help you trading. as I'm not in this trade, I just looked at it as for demo purposes, but it really did go in our favour. Anybody got any questions on that before I go back to the afternoon crossfire?
Question.
Yeah.
Sorry, go on, Malcolm.
Did you say you get in on the 5 minute and out on the 15, or vice versa?
No, I think what Paul and the Hoff have been saying is in testing, they've been getting in on the 5 minute and then switching to the 15 minute for an exit. And I've been looking, well, I was looking, that was why I was watching this trade with that in mind. I'd actually got in on the 5. Now, if you look at the 5 minute chart, you could see that there was a couple of wobbles where price headed upwards. One there, the nice bull candle, a bull candle there. So on the 5 minute chart, you would have probably been tempted to get out fairly early on in this scenario. Whereas if you look at the 15 minute chart, there's a bit of a wobble there, but you know, everything's still saying down. The PSARs are well above. These purple blocks are really strong. You've broken through the 55 moving average. So I think that move from a 5 minute chart to a 15 minute chart is really just giving you the confidence to stay in.
It's one of those things, isn't it? It's learning to trust the system.
Exactly.
Still new, and back testing it and all the other things that give you the confidence. Yeah,
that's exactly my point. And Paul and the Hoff have both tested this, and they're both in favour of switching up a time frame. Just to give you more confidence in staying in. And if you look at the 30 minute as another example, there's no pullbacks. It's entirely going down. You've got the wave down signal later, but it's still a strong downward move with you're not going into any drawdown or very little drawdown.
And a huge gap between the PSARs and the price.
Yes, exactly. The PSAR's there and the price is way down there. So I'm really just trying to sort of introduce another line of thought into your trading. I certainly watched that with interest this morning because it was on the 5 minute. There's a couple of wobble. Well, there's a wobble point there. I know that's not really a technical term, but you know what I mean. There's a place where your confidence might wobble. If you look at the 2 minutes chart on the same trade, you even got some wave ups. There's a wave up signal there and a wave up signal there. So that would have sort of said, well, given you the message, it's time to get out. But looking at a higher time frame, you're not quite as worried. And certainly if you go to 15 minutes, you've got more confidence in the trade. I know it's exactly the same trade and price is doing exactly the same on all the time frames. It's just a matter of confidence. If you'd had the confidence to stay in that trade, you would potentially have got 2 to 1 or 3 to 1. And if you just stick with it all the way, you would potentially have got 8 to 1 on that one. So I just want to illustrate a point on that. It was outside of the crossfire hours. And B, there was times certainly on the time frame I got in where I would probably have said, I'm going to get out. Certainly at that point there where there's a bull candle, I would have been, you know, you'd have to be really confident in the trade to stick in. Well, the PSARs have flipped. They've gone from top to bottom. So you might have got out of that trade early and then regretted it. Anyway, I'm just making the point. If you look at the higher time frames, might give you a bit more confidence to stay in. Let me just have a quick look and see who's on. Okay. So I'm going to go back to the afternoon crossfire pairs and see if we can find anything. So this is Euro CAD. We're in a down zone. We've got a wave down. Price is going down. we don't have a bear candle. What I could do if I was looking for a stop loss here is I quite often use the wave down candle. If there isn't an actual bear candle to give me an obvious stop loss, I will go to the top of that wave candle. And again, just purely for demonstration purposes, I'm going to mark that off. The top of that wave candle would be my stop loss in this situation. So I'll make that red. Now, if I'm considering getting in, I'm obviously not going to get in when this candle is green. And the other thing that's putting me off is this is an indecision candle. It's a tiny body with big wicks both above and below. This is still saying bearish. The PSARs are on top. We've got a nice wave down and these candles are growing in size. So everything's saying we should be getting in for a sell, but I'm not going to because this is indecision. But I'll leave the stop loss marked for when we come back to it. Right, okay, so we've got a down zone, we've got a wave down price. The wave is heading down, but it looks like it might be reversing. We've got a bull candle and price is heading up. But also notice there's 55 moving average. Look where price is. Price has a habit of sticking to that 55. So for me, that means leave that alone for the time being. And if we go down to GBP card, now it's a bit more definite. We're in a down zone. We've had a wave down. We then had a wave, so an up zone and a wave up. So it's a bit contradictory. Saying we should be going in for a buy, but actually price is coming down.
I think it's bounced off that moving average, that yellow moving average, which is what, 5 EMA.
That's right. And look, if you look further back, you'll see it's done that quite a few times this morning.
Yeah.
It's tried to break up above it. It's bounced off it. It's come down. It's had another go there. It's come down. It's had a third go there, and it's had a fourth go there. So it keeps trying to break through, and it's not having any success. So we'll leave that alone for the time being. GBP USD. Another situation where the moving average is looking quite important to us. We've got an up zone. The wave has changed colour. We've got a wave up signal there. So we're looking for a potential buy. We've got a bull candle there, but we're stuck at this point here. And again, if you look at what happened this morning, it's been hovering around from, well, certainly since last night, it's been hovering around this 50 moving average without any great movement. It tried to get away from it at that point, and then it's returned to it. I mean, obviously, you know, moving average is a one indicator that you can look at, but I do find that when in that situation, when price is getting close to a moving average, it's best to stay out until it either breaks through or bounces off. And that candle is indecision candle. So I'm not going to get into that just yet. So we've looked at the 4, we'll look at gold. We're in an up zone, we've got a wave up. These grey candles or grey blocks are getting bigger. We've got a bull candle. The PSARs are below. Therefore, we should be looking for a buy. Similar situation to the last one we looked at. This is an indecision candle. We need to sit and watch this one for, well, we've got 22 seconds left on this candle. What I could do is mark where my stop loss will be, and it will be one of those 2 green lines there. So I'll put it sort of halfway. That's where my stop loss will be if I decide to get into a trade. I just need a bit more of a definite upward candle like that. So again, just for demonstration purposes, let's let's try this. That's our entry point. And if I take a long position, put it on that point there. And drag this down to the stop loss. That's giving you a reading of 326. You actually, on gold, you read it differently to Forex. That's 32.6 pips. That's quite a high number. But because we're dealing with gold, which moves further and faster than anything else, it's not beyond the bounds of possibility. So which pair did we took a trade? Oh well, we took an imaginary trade on, which one was it? There we go. So it worked out for us eventually. We were going for a sell. It hit our first take profit and went beyond it. If we just drag that down to 2, we probably missed that. 1.97, 2.038. That actually took a second one. It went down. So that trade would have given us a 2-to-1. I wasn't particularly confident about it when I jumped into it, but so you could have taken a 2-to-1 on that before it started to reverse. You might have ended up with 1-to-1. Anybody got any questions before I move on? Right, here we are. We've got a bit more interest here. Okay, so we've got an up zone. Prior to that, the candle before it, we got a wave up. But can you see the strength of the candles, which I always notice? See, these are quite well. These are fairly weak candles actually in relative terms. But that wave up candle was almost non-existent. So this was a period to keep out. We need to watch and see this one. We need to see if price breaks through that 55 moving average. Well, it has. It's gone past it now. Why am I not feeling confident about this? Just bear with me. I'll just have a reset of the chart. Okay, so it's looking a bit stronger on that than it did on the other chart. So let's do what we did in the past. We marked this one as our stop loss because that's the bottom of the bull candle. That needs to be red. So you've entered your risk percentage, you've entered your stop loss, and you enter the trade where price is now. And then you wait. We need to take a long position on this and set it on the green line. Drag your stop loss down to the red line. And take this up. So we're asking a lot here. We're asking for it to get right up to that point there. But it is 1:30 and we do tend to get a movement round about this time. So that's Euro card. Sorry, that's Euro US dollar. GBP card. Okay, up zone, wave up, bull candle. This is saying bearish. Let me just look at the, okay, so you see how when the wave up, there was quite a, well, that block was bigger than the current block. That's basically what I'm noticing there. It's actually tapering off. So I'm not going to get into that just yet. And the GBP USD is, I was going to say, it's probably the same. It's actually a little bit stronger. So we've got an up zone, we've got a wave up. Price is indeed going up. The PSARs are below the candles, but we're stuck at the 55 moving average. And this is saying bearish. So again, I'm going to look further back and see how many times it's. So right from this point here, it's been hovering around this 55 moving average. We need it to break through that before we consider getting in. Okay, so we'll leave that one alone for now. It's once it breaks through that 55 moving average and gets to a point up here somewhere, we'll consider getting in for a buy. We'll come back and reanalyze that. But that moving average, it could just bounce off that. So let's go back to gold. I think we got into a trade on gold. That's not looking good, but all the signs are still there. This is still saying bullish. PSARs are still below. We've broken away from the moving average, and these candles, these wave candles, are getting bigger. So trust the system and wait. The other thing I should say about this straightforward forex system is that you probably get a few losses. I mean, you will get losses. But it's part of the system in that if you're going to take a loss, I'm guaranteed that my loss on this trade is only going to be 1%. So even if I lose this trade, I'm only losing 1%. I'm going to keep 99% of my balance. And because the trades are coming along at a rate of knots, it's only a matter of time before you get a 1 to 2, 1 to 3, 1 to 4. So you're back in profit fairly quickly. Let's have a look at this one. That's the one we just looked at. But I mean, we just looked at that one there where we're potentially looking at this one here. Price is going in the wrong direction. It hasn't stopped us out yet, but it's not looking brilliant. But even if I lose 1%, I've already made a theoretical 2% there. It's not, yes, if my risk is 1%, then I've made 2%. This one, again, that one hasn't gone in my direction, but we're still in the trade. GBP card. That one I said I would wait. What I'm seeing is up zone, wave up, but not a strong move up at the minute. Just remove the actual candles. It started to look like a strong move and then it's tapered off. So I'm going to keep out of that one for now.
The euro US dollar's moving quite nicely upwards.
Euro US, that's that one there. Yeah. So say again, I didn't quite catch that. Right, so we're into a small profit on Euro US. I look when I sort of analyze, am I going to stay in this trade? I'm looking at, we've got a up zone, we have a wave up, we've got a nice grey block there. We had a bull candle at that point, so things are still looking good for a buy. There's nothing negative there. PSARs are in the right place. There's nothing stopping us. We've broken through the 55 moving average, so there's nothing to stop us heading further up. So you just got to sit and wait on that one. That's Euro US is a good pair to watch, by the way. If you're looking for trades, I always look at Euro US. It happens to be the most traded Forex pair ever.
Richard, my earlier question was which you seem to kind of have some demo trades on a number of different pairs. I wondered which ones you were watching and how you kind of find those, or are you just watching a limited number of pairs?
Yeah, I just watch a limited number. I tend to stick with the Crossfire pairs, but I stick with all 9 of them.
Right. Yeah.
Those are my basic pairs. I take the ones that we've. Where are we? Euro card. Yeah, I stick with those 5 pairs plus the morning Crossfire pairs, and I generally get sufficient trade opportunities out of those. If I find that I'm not seeing an opportunity, I go to the harmonic scanner.
Right. Yeah.
That's my second port of call, and I look at if I'm looking at the 5-minute chart, I look at this is not going to work for me. Not a good idea. Bear with me 1 second. Just come out of that and get in again. I am seem to log you out if you don't use it for a while. No, that's not going to work either. Anyway, the sequence is I look at my 9 Crossfire pairs as my first port of call. The second port of call is the harmonic scanner. I look at, because I'm working on the 5-minute chart, generally I look at the 15-minute harmonic scans first to see if there's any recent scans, and if I get nothing from that, I go to impulse. But generally, because I'm lazy, I go with the pairs that I know best, Crossfire pairs.
Okay, great, thank you.
And I find if you flick between these 9 pairs, yeah, there's sort of 8 Forex pairs, and I've added gold to the equation as well. So there's 9 of those, and I find I generally get enough trades out of that. Especially if you can be on the charts at 6, 7 o'clock in the morning, and at this time of day. But
do you tend to leave gold alone on this one, Richard?
I look at gold on certainly on the afternoon session, but if I'm teaching, I tend to neglect it a little bit, because it's a bit more. What's the word I'm looking for? It's a bit more scarier than the Forex. Yeah. It moves faster and further. But I don't neglect it if I'm doing my live trade. My actual live account. I do look at it, but I tend to look at it on this afternoon session.
Okay.
I think the answer really is I don't think gold is for absolute beginners. I think you've got to have a bit more confidence to take this one on, but it can give you better rewards. Let's just analyze this chart whilst we're looking at it. We got a wave up, so we got an up zone and a wave up on the same candle there. We've had another wave up since, well, it had a wave down, then a wave up. At that point, it broke beyond the, it was sticking to the moving average. Look at it, all the way there, it's been sticking to the moving average. Then it's decided to make a move and go upwards and break away from the moving average. Our PSARs are still below the price and well below. And these candles are nice and steady. They're quite big, nice and steady movements. So I've got no reason to worry about that trade. I just think it'll take a bit of time. Where it's 145, because there was no news, when we looked at the news, we saw that there wasn't the usual 130 US dollar news, which is what we like to move the price. So that's absent today. So that's why we're not getting a big movement. But we'll come back and look at that. We'll go back through the pairs, Euro card. Well, that one's been and gone. We could have got 2% or risk reward 1 to 2 out of that. What I tend to do is when I've got a trade like that, I take the drawings off so I get a clearer view of what's actually happening now. So I'm now looking for a fresh trade on this, and I'm saying, right, I'm in an up zone. I've got a grey wave there, but not solid enough, not consistent enough for me to get in. And I'm bearing in mind that we've got a moving average just above where price is. I say just above, we need to measure it. It's about 8 pips away from current price. So I'm going to be cautious about this, because even if it does head upwards, it'll probably bounce. It'll certainly hesitate. So I want to know, is it going to break through and give me enough room to make profit? So Euro card, I'm going to stay out of for the time being. This is also saying bearish, another reason to stay out. We've got a bull candle. We could, I guess, put a stop loss on that candle, on the bottom of that. But I'm not going to get into that. In fact, there's a bear candle. So there's nothing certain about that. It's pretty uncertain. Euro US, we'll have a look back at that. Yeah, it's still hovering around. Oops, I didn't mean to do that. I'll have to adjust that again. Right, where did I get in on that one? Well, it's a green line there. Okay, so I'll move this up. That was my entry point there, wasn't it? So that's my stop loss, that's my entry point. My take profit is up there. Yeah, that's the danger when you're messing around with charts. You can move things accidentally. So that's still hovering around my entry point, but I'm not getting worried, because I'm still in an up zone. We had the wave up signal. PSARs are below the price. Nothing to make me doubt that. It's just the fact that it's a slow day. There's no news. Just in case anybody missed the beginning, that's the news situation. Everything's low level, low intensity. There was no US news at 1:30, which normally is the thing that moves price. So I said when I looked at this, I don't think we're going to have a fantastic day. I think it's going to be a slow day, and so it is. GBP card.
You can't have good days every day, Richard.
No,
you might have it in your mind, but
well, it's part of trading. You know, the thing is not to try and force a trade.
No.
If the trade's not there, don't enter. There's always another trade coming out.
Another day.
So here we are. Let's have a look at GBP. British pound has gained in strength this morning, I think. Or look at GBP USD. It's not a crossfire pair, but I tend to gauge what's happening with the pound better on the US dollar. If I look at the higher time frame, it had a dip early on, but since lunchtime it started to go back up again. It's not one that I would want to get in right now because it's contradictory. It's we've got some nice green candles, but we've still got a purple wave down and a nice bear candle there. So, and again, here's a 55 moving average standing in our path. So the reason I looked at that, I was looking at the price. It's 113, so it's stronger than it has been for a couple of days, but only marginally. So let's have a look. Looking slightly better. Oh, we're on the 1 hour. Let's go back to the 5 minute. Look on the 15 minute. See, if you look at the 15 minute, you've probably got a bit more confidence. So I'm starting to look at getting into a trade for on the 5 minute time frame and looking to get out on the 15 minute. And that's the reason why the confidence isn't being shaken as it would be on the 5 minute. So I'm going to stay in that one. Euro cards, the next one down. We marked our stop loss thinking that price might be going to go upwards, but it's actually continuing to go down. So we'll leave that one for now. Euro US, I think we got in a trade there. There's just no movement, is there? No movement at all. GBP card. We marked, well, we recognize this as a potential stop loss, but see these grey wave candles are really flat. I'm not interested in that at the minute. And GBP USD. Right, well, we'd have to wait until it pulled away from that moving average. You could be tempted to get in at, if that candle turns green, you might be tempted to get in, but why wouldn't I get in that for a buy? We've got an up zone, we've got a wave up, we've got some nice strong wave candles, but this is hovering around the 55 moving average. And if you notice, there's a green dashed line there, which is indicating a point of resistance. What it's saying is, or what it's potentially saying is, we're currently in a bearish mode. The market bias is bearish, and it'll stay bearish until price gets above that line there. So I'd be looking for price to move away from this moving average, and ideally for it to break above that dashed green line. I'll just reset the chart and try and put it in better context. There we go. So it's been on a big downward movement. There's a point of resistance there. And I would want it to get above that point before I got in for a buy.
The gap, Richard, between the PSARs and the present price is huge.
Yeah, it is. It is. Everything about that is saying we're going for a buy, apart from just what's going on at the minute. It's sticking, it's clinging to that 55 moving average. But potentially there's a buy in that pair coming along soon. And this is how I trade. I flick through. I'm looking at 5 pairs on this session, and I just flick backwards and forwards through them until I see an opportunity. Nothing going on there. That one we're in already. This is saying bullish, wave up, wave up, zone up. So everything about that is saying we're good for a buy. But because the market is so quiet, let's just put the. I haven't looked at this for a while. There's an indicator that shows the volume. Put that one on there. And you might have to reset that chart. Right, so these candles at the bottom are indicating the volume by candle. So what it's saying is the current candle is predominantly sellers because it's in red or pink. Previous three have been predominantly buyers and increasing in volume, and then it's dipped down. See if I can get a closer look at that. No, it's not letting me. But you can see how at that point there was very little volume in the market. Then it increased, it came down, it went up at that point. That was a high point. Well, that was a high point, and now it's going down. So the volume in the market is not working in our favour at the minute.
Where's that volume, Richard? Is it in the indicators?
Yeah, it's in indicators. If we just look for volume,
is it under technicals or?
Let me try and find out where I got it.
Right, I found it.
Yeah, okay. That just it gives me another clue. I don't use it an awful lot, but I'm just trying to make a point that the market is a little bit quiet for the time of day. There's not much going on. If we go back to yesterday, we'll see that potentially more. You see, yesterday at this time, it was up at that point. Let's just mark that. Volume was. So I've just marked that with a red. I'm going to change the color just in case we get it confused. I'll make it black. I'll make it black if I can. There we go. What's going on? I'll make it grey. Okay. Right. So I put a grey line on, and I'll move back to where we are now. So you can see that volume was way up here compared to way down here. That's today at this time. Sorry, that was yesterday at this time. Today at this time is guesstimate roughly half the amount of volume. So that's the volume of trades being placed. So it's not a particularly busy day at the minute. Let's just reset that and see what we're looking at. Okay, so it's looking a bit more promising now than when we last looked at it. So we're in profit. You can see this current candle has changed from red to green.
Yeah.
And price is actually moving up. So it's another indicator. It's not the be all and end all, but it's another way of judging what the market's doing.
Would you move your stop loss up, Richard, to?
What I'll do is I'll measure and see how many pips I'm in profit. So where the price is now down to break even is about 4 pips. Yeah, I could be tempted because the market's moving really slowly. I might just take the money and run. Well, you know, move my stop loss up, or perhaps even consider getting out of the trade because it's so sluggish. Yeah, move your stop. First thing, move your stop loss up because that's a big gap. That's 18 pips, so you could afford. Actually, if you'd moved your stop loss up, you would have been taken out. Whilst we were talking, we were taken out at break even. So the benefit of moving your stop loss is you would have got out without a loss.
Yeah.
Now you're sort of stuck in the trade to see if it'll get back into it. Yeah. But yeah, that's a fair point. Because the market's moving slowly, I should possibly have considered moving my stop loss up earlier.
That yellow 55 moving average is now beginning to point up.
Yes, it's and basically what it's saying is that that's telling me that the average of the last 55 candles is now moving upwards. But anyway, we're back in profit, only a little, but you could move your stop loss up there if you haven't done it before. Or as I say, because the market's moving so slowly, you might just want to get out at that point, and then you haven't lost anything. But you cannot force the market, you cannot force the trade. Let's just have a look at that. I'm going to remove that volume. So Euro card is going down, but it's stuck at the 55 moving average. So we need to come back and look at that. weren't we in a trade on this one? Was it lost my drawings?
Euro USD is on its way up again.
Yeah, as is gold. I thought I had a trade on that one, but anyway, never mind. Euro USD. Oh, no, that was where we were. Yeah, Euro USD is going up. Yeah. Right, so we're coming to 2 o'clock now. I'm going to think about ending this session. So just to quick run through the 4, 5 pairs. Anybody got any questions? Now the time to ask. Up zone, wave up, green candles, nice, increasing in size blocks. Just on a bit of a pullback at the minute, but I suspect that'll continue to go up. This is saying bullish. Pre-SARs are well below, so if we get a bear candle, I might change my mind. But anyway, nothing exciting there. Euro card price coming down, down zone, wave down, price coming down. Looks like it might be turning around, but not definite yet. Euro US. There's a bear candle trying to appear. Let's have a look at a bigger time scale. Yeah, lower time scale. Yes, it's mincing around. Not there's nothing definite. So if I was in that trade, I would be seriously considering getting out at a small profit. I don't like sitting for hours and hours. I did on this Euro Aussie dollar that I was showing you, but I was just looking at it out of interest. If I was actually in this trade now, I'd be wanting to get out, I think.
Quick question, Richard. The 1 minute, 2 minute, 3 minute, 5 minute. I remember seeing it somewhere. Where do you actually change that?
Okay.
If you want to add a 30 minute.
If you see where my cursor is now on this little arrow next to.
Oh yeah.
Yeah. So if you go on there, it gives you all the options. You got minutes, and I've got gold stars next to those. If the time scale that you're looking for isn't there, you can add it at the bottom.
Yeah. I just didn't remember where to do it, but I just couldn't remember where it was.
Yeah, it's just there. I don't know why I've ended up with 1, 2, 3, 4, 5. 1, 2, 3, 5. But anyway, they're not doing anything. But I do like to flick up and down the time frames just to get the big picture. You see here, this price is barely moving. If you look at it on a 1 hour time frame, it's gone up above and now it's come back down again, and it's just not. We've got the purple candle, so we should be getting out, I guess. The PSARs above, that's telling us the price is going to go down. So if I was in that trade, I would be getting out of it. Ideally, I should have got out whilst I was still in profit. But anyway, GBP card. Have a quick look at that one. That's well, it's saying ranging. That's exactly what's happening. It's in consolidation. It's bouncing off that 55 moving average, trying to break through it, bounced off it again. Not something I would want to get involved in right now. And GBP USD. That's been going up and it's now looking like it might be coming back down again. We've got a down zone, we've got a bear candle, PSARs on top. So that looks like it might be coming down. But again, I wouldn't be getting into that. So it's after 2 o'clock. Any last questions before I stop this recording? And I will put it into the group when it allows me to later this afternoon.
Thank you, Richard, again for your
No problem.
Thanks, Richard.
No
knowledge.
problem at all. Thanks for jumping on.
Okay, take care. Bye,
Cheers.
everybody.
Cheers now.